Important to note here is that when you're looking at the longer term time frame, we have these absolutely massive dollar strength trades that are developing here, and I feel like we're kind of commentating a turning point here inside of our markets that is going to be really really important. We are touching a little bit on this in the middle of the daily doldrums, and the reason that we're touching on it is because there are forces that are creating massive headwinds for the indices. There's the dollar strength cycle, which we just mentioned. There's the Fed rate cut lag, which is 11.07% rally and an 22.2% decline after the Federal Reserve starts cutting interest rates. In the middle of that, we had an energy spike. We had crude oil spiking higher, and you're going to see the results of that here in a little bit. And then we have, of course, connected with that, the war in Iran, the energy to Fed fund futures to VIX to indices mechanism that is pushing rate cuts further out into the future. And then on top of all of that, you have an AI creating a deflationary shock. And then the last thing for us is, does the trend break? Does the trend break? And so this is a regime tracker where we are, and it is live and intraday. It isn't slow moving. We have it hooked up to the daily, weekly, and monthly charts, and we're slipping into a deflationary bust. And what that is and we're not necessarily debating whether we're in a bust or not. It is more of a, is it an inflationary bust or a deflationary bust? When you look at crude oil priced, or the S&P 500 priced in crude oil, and you zoom out here, think about this is the 2020 coronavirus crash. And then, of course, we were declining into 2022. Remember, 2021, 2022 was the last dollar strength cycle. And then we came out of those lows. And the crude oil price, or the S&P 500 priced in crude oil, was rising. When the ratio is rising, it means the stock market is growing faster than energy costs. The economy is efficiently transforming cheap energy into valuable output. Businesses are productive. You can see traditional long setups here. This chart shouldn't be technical. It is. It defends traditionals and extensions. When the ratio is falling, it means that energy prices are rising faster than the economy can absorb them. And we peaked up here into a 50% short on April 17th. On April 17th. The reason this is really useful is when you're just watching the S&P 500 in dollars, that's the dollar, or the stock market priced in nominal dollar terms. During a period of surging oil prices, it's not actually productive growth. It's just inflation. Pricing the market in oil removes that illusion. And this is where we have a bust. Now, the question of what kind of bust is it? Is it an inflationary bust, or is it a deflationary bust? Right now, we're in the area where we are right now, we're in a deflationary bust. And when TLT to gold, or the bond markets to gold, is rising, when that ratio is rising, it means the treasury bonds are outperforming gold. I'm going to zoom out here for a moment, though. Actually, go out to the monthly charts. Look at how absolutely this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.